Okay, welcome to the deep dive. We've got an interesting stack of sources in front of us today. It's a collection of recent articles and news snippets you've pulled together. Gives us a real snapshot of what's been happening lately in the world of digital assets, particularly around how businesses and, well, the market itself seem to be evolving. So our mission for this deep dive is really to try and cut through the noise in these updates, find the genuinely important nuggets, and understand what they tell us about the current pulse of the crypto landscape. It's about connecting these individual headlines into something, well, a bit more meaningful.
Exactly. And what's interesting is we're seeing pieces here that touch on corporate strategy, market performance metrics, and even glance ahead at potential future risks. So looking at them together, hopefully we can build a richer picture than, any single article provides on its own. It feels like capital is flowing into this space from a few different directions right now, and these sources definitely hint at that.
That's a great starting point. Let's unpack that idea. Capital flow, corporate interest, several sources touch on companies directly. Engaging with the digital assets and looking at this one from CoinMarketCap first. It's a guest post by CoinCo. Reporting that Treasury Global is launching, get this, a $100 million digital asset reserve plan. $100 million. That's quite a figure. We're seeing it pop up.
Right. And that figure, it's significant because it signals serious intent. For a company like Treasury Global, putting together a formal digital asset reserve plan, well, it suggests they're moving beyond just theoretical interest or, small-scale tests. They're actually integrating digital assets, most likely cryptocurrencies, into their formal corporate treasury strategy. This isn't just a speculative punt. It's potentially holding these assets on their balance sheet like other reserves. It's a formal step, kind of aligns them with that broader trend of corporate adoption we've been tracking.
Yeah, exactly. And speaking of that trend and that specific $100 million figure, I have another source here that echoes it almost exactly. This one's from canalcoin.com. It reports DigiAsia Corp also announced a $100 million treasury strategy. But this source, it's a bit more specific and says they plan to include Bitcoin and Ethereum, specifically increasing their holdings in those assets.
Okay, see, this is where comparing the two gets really interesting. Treasury Global calls theirs broadly a digital asset reserve. DigiAsia explicitly names Bitcoin and Ethereum. That tells us DigiAsia is targeting, well, the two biggest, most liquid, most established cryptocurrencies out there, holding BTC and ETH on the balance sheet. It isn't just an investment decision. For many, it's seen as a strong vote of confidence in the long-term value, the foundational role of those specific networks. And seeing two different companies announcing plans of a similar, $100 million magnitude, it suggests this could be becoming a sort of emerging benchmark. Or maybe just a comfortable initial size for corporations dipping their toes further into crypto.
Okay, so companies are building these reserves. What about the infrastructure, the expertise needed around corporate crypto holdings? The source from the ccpress.com adds another layer to this whole corporate theme. It reports a pretty notable investment. Adam Back has put $2.1 million into a company called H100 Group. The source describes H100 Group as a Swedish Bitcoin treasury firm. And here's where the market reaction is kind of wild. The article notes H100 Group's share price jumped a remarkable 37% right after this specific investment was announced.
Wow, yeah. That 37% jump, that's incredibly telling, isn't it? It really highlights the weight that certain figures still carry in this space. Adam Back is, well, he's hugely respected, a pioneer in the ideas that led to Bitcoin. So his investment in a Bitcoin treasury firm isn't just about the money. It's a powerful endorsement. It endorses the company's mission and, frankly, the growing need for specialized services to help companies manage Bitcoin on their balance sheets. The market reaction suggests investors see this as validating H100 Group's business model, potentially boosting its credibility among corporate clients who are looking for help in this, let's face it, pretty complex area. It connects right back to those first two sources we talked about. As more companies think about holding digital assets, firms like H100 Group just become more relevant.
Okay, right. So we've looked at corporate strategies, investments into that treasury infrastructure. That's one angle of capital flow. What about activity on the platforms themselves, where users are actually transacting? This source from bitcoininfonews.com gives us a peek into that with an interesting metric. Weekly fees. It highlights that PancakeSwap, the major decentralized exchange, has risen to second place in crypto weekly fees, actually surpassing Circle, the issuer of USDC.
Interesting.
Yeah, and the source adds that Tether USDT still holds the top spot in this ranking.
No surprise there, perhaps. Right, tracking weekly fees is actually a fantastic way to see where real economic activity is happening. Fees are generated by actual transactions, people trading, swapping tokens, using services on these platforms. It's real usage. PancakeSwap climbing past Circle is notable. It shows significant user engagement and volume on a decentralized platform, which indicates, the continued vitality of the DeFi space. It's users actively using the protocol, generating revenue for it, Tether staying at number one. Well, that makes total sense. As the dominant stablecoin, it's the most used asset for trading pairs across the entire ecosystem. So the fees tied to its movement and use are just massive. It really underscores the dual nature of the market, foundational stablecoin activity alongside this dynamic DeFi platform growth.
Right. And speaking of platforms and activity, getting listed on a major exchange is often a huge driver, right, for attention, liquidity. This next source from Bitcoin Systemi EN covers exactly that. It shares the news that Binance has listed the altcoin Resolve, ticker RESOLVE, and they've listed it on both Binance Alpha and their futures markets.
Yeah, a Binance listing is, well, it's a massive event for pretty much any altcoin. It immediately exposes the asset to Binance's enormous global user base, its liquidity pools. Listing on Binance Alpha, which is basically their main spot trading platform, means people can just buy and sell it directly. Adding futures alongside, that allows for more complex trading strategies, hedging, leverage. This kind of dual listing can dramatically increase a coin's visibility, its trading volume, potentially its price. It brings a significant influx of capital and attention to that specific project. It's a key milestone for smaller cap tokens, aiming for wider adoption, definitely.
Okay, shifting gears again slightly, but staying on this theme of large capital flows this time, though, from traditional finance. It's Bitcoin World Source talks about BlackRock's spot Bitcoin ETF, IBIT. And the article points to a specific achievement. IBIT achieved a phenomenal top 25 ETF ranking speed based on its rapid asset accumulation.
Right, that phrase, rapid asset accumulation, that's the key bit there. It means investors were just pouring money into the IBIT ETF shares at an incredibly fast rate right after it launched. And when investors buy those ETF shares, the fund manager BlackRock, in this case, has to go out and buy the underlying asset, Bitcoin, to back those shares. So rapid asset accumulation directly translates to massive inflows of traditional financial capital buying up Bitcoin just through this regulated wrapper. Achieving a top 25 ranking speed across all ETFs, not just crypto ones, that really highlights just how unprecedented and strong the demand for this product was. Particularly among traditional investors looking for Bitcoin exposure, it's another major stream of capital entering the ecosystem.
Okay, so we've covered quite a bit. Companies adding crypto to their balance sheets, investments in that infrastructure, activity on DeFi and centralized platforms, these huge flows via traditional finance ETFs. It paints a picture of, growth in incoming capital. But this last source introduces maybe a note of caution. Looking ahead at potential challenges, this article from the CoinRise Media, it's dated June 3rd, 2025, raises a pretty significant concern. It asks if the crypto industry is truly ready for the looming threat posed by quantum computing. It specifically mentions that financial analysts are expressing serious concern about this. Cites Rick Maida as a lead analyst on this point.
Yeah, this is a critical consideration, albeit maybe a longer-term one for now. The concern around quantum computing, it relates to its potential ability, once powerful enough machines are actually built, to break certain types of cryptographic algorithms we use today. Specifically, the worry for crypto lies in the potential impact on digital signatures. The cryptographic keys used to control and transfer assets. If quantum computers could break these signatures, it could theoretically compromise the security of wallets and transactions in some systems. The fact that financial analysts like Rick Maida are highlighting this now, it means it's not just a theoretical physics discussion anymore. It's moving into the realm of recognized financial risk, something investors and institutions are starting to consider when they evaluate the long-term viability and security of digital assets. It's really a call for the industry to proactively research and implement quantum-resistant cryptography. It's a serious challenge down the road.
Wow. Okay, looking back across this stack, we've covered a lot of ground. From that specific trend of companies like Treasure Global and DigiAsia building serious digital asset reserves, Adam Back's investment kind of endorsing the Bitcoin treasury concept, signals of activity on platforms like PancakeSwap, new listings on Binance, the sheer scale of traditional finance inflow shown by BlackRock's IBIT ETF speed, and then finally this forward-looking warning about quantum computing. Quite a mix.
It really is a dynamic picture, isn't it? Individually, these were just headlines. But taken together, they illustrate several powerful forces at play. Increasing corporate comfort with digital assets, for one. Continued innovation and activity within the native crypto space itself. Significant capital entering from traditional finance. And also, this growing awareness that fundamental technological challenges need to be addressed for the long-term health of the ecosystem. It shows both immense momentum and definitely evolving complexity.
And that brings us to a final thought, something for you, the listener, to maybe consider based on what we've discussed today. Given this increasing trend of companies like Treasure Global and DigiAsia building significant digital asset reserves, accumulating these assets, and the fact that analysts are already voicing concerns about future technological threats like quantum computing potentially impacting asset security down the line, what kind of strategies might these companies need to develop beyond just the initial act of accumulation? What else do they need to do to genuinely secure their digital assets for the long haul, especially in what looks like a rapidly changing threat landscape? Just something to think about as this space continues to evolve. Thanks for diving deep with us.